Okay, so chapter 3, we're going to actually get into applying managerial accounting. And one of the things that managerial accountants will be asked to do is help with costing the product, determining what it costs to make our product. And we're going to look at one method for determining the cost of the product, and this method is called job costing. Okay. When we get to chapter 5, we'll learn another method called process costing. And it's not necessarily a choice to use job costing or process costing. It's really based on the type of company that you have. So job order costing or job costing is used when you are making a unique product. Okay. Process costing is used when you are mass producing all of the same product. Okay. So here we say process costing, mass production. All of your products are the same. And we're going to see when we get to chapter 5 that we are going to average the costs that we've incurred by the number of units that we've made. Job costing, we're making custom products. Every customer is coming in getting something different than the next customer. Okay, so we are going to be tracking the costs by that specific customer or job. So, testing you, and what type of organization is job order costing most commonly used? Manufacturing companies that produce homogeneous goods, right? All the same goods. Businesses that provide generic services, custom-made services or products, none of the above. Well, we know we're talking about custom-made products when we're talking about job order costing. So let's take a look at some examples. Okay. So if we're talking about an automobile repair shop, somebody coming in for oil change versus someone coming in to get a new transmission, right? They're going to have very different costs. So we're going to be dealing with job costing, right? You're going to charge someone for the oil change, whatever, $35. A transmission could be $3,500. A chemical manufacturer, that would be process costing. You're just churning out all of the same product. A custom furniture builder would use job costing because it's customized. A movie production studio, job costing, right? Is it a drama versus an action movie, right? Very different costs depending on the individual movie. A paint manufacturer would use process costing. So that's what we're going to be looking at. The automobile repair shop, the custom furniture builder, the movie production studio. Every job they're doing is very different. And so we are going to be accumulating costs by the job. So we went over this in chapter 2, the way our costs are going to flow. When we buy the materials for the job, it starts in raw materials and moves into work in process as we start to work on the job. And then when the job is complete, it goes into finished goods. When we sell it to the customer, then it goes to the income statement as cost of goods sold. So when we get a customer's order coming in, right? We maybe have several customers' orders. We're going to develop a production schedule. Okay. And so we're going to determine what do we need for the things that we're going to make during the period. Okay. And some companies may have a batch of stock inventory. So just some products that are on hand ready to fill orders. So when we know we have a job, okay, we'll prepare a bill of materials. What are all the materials we need for the job? Okay. So kind of like if you're, making dinner, what's everything you need? What are all the ingredients you need for what you're going to cook? Okay. And then what you do is after you see your bill of materials, everything that you need, then you look to see, well, what do we need to buy? First, we got to see what do we already have. So that's what the raw materials record is. Okay, shows the number of units, the cost for the units, so we can see what do we actually have, right? So you have the list of what you want to make for dinner, all of the ingredients you need. You go and look in your pantry and see what do you already have. So then we can determine what do we need to buy, right? If you're making dinner, what do we now need to go get from the grocery store? So we get our grocery list together. So then we can go ahead, buy the materials that we need. And in accounting, they'll get the invoice right? We know because of internal control, they should be comparing the invoice to the approved purchase order that we were given permission to buy, compare that to the receiving report to make sure that they all agree. What we had permission to buy is what we actually received, and that's what we're paying for. So let's take a look at how accounting would record the purchase of materials. So when we're buying some raw materials, if we're buying them on account, we would debit that raw materials inventory account. We would credit accounts payable, right? Since we're using job costing because we have a unique product, we're going to track the cost for a specific customer on a job cost record, right? We need to keep track of what we're spending for each job. So we'll show all of our product costs, the direct materials, the direct labor, the manufacturing overhead. And so your job cost record is going to be prepared as you are working on the job. And so as we're working on the job, this is the work in process, right? The work in process inventory are the units that we're working on. So the job cost record really shows the detail for your work in process inventory account, right? They go hand in hand. If there's something on the job cost record, that means that same amount needs to be in the work in process inventory account because that's what we're working on. So here's what a job cost record is. We can see for a specific job, we can see they requisitioned materials and 40,000. Workers are going to have to keep track of their time. As they're working during the day, they're going to have to keep track of which jobs they're working on because we need to include the cost of that labor on that job. And then we've got a spot for manufacturing overhead. We'll add together the three categories of manufacturing costs to get the total job cost. But then if we want to see how much it costs per unit, we'll divide it by the number of units we made in that job, and that'll tell us how much one unit cost. So when we start a job, we're going to get ready to start working on a job for a customer. We need to requisition materials. We need to ask them to bring some materials from the storeroom to the plant floor so we can start working on them. Okay. And so the amount of direct materials we use for a job is going to be recorded on the job cost record. And as I said, if it's in the job cost record, it also needs to be in the work in process inventory account. So when we requisition materials, we are going to get direct materials for that job. We also may ask to have some indirect materials brought to the storeroom floor. So maybe we'll ask for some glue and some sandpaper in addition to, say, the wood that we need to build a chair. And so the glue, the sandpaper, that will be our indirect materials. That'll go into manufacturing overhead. The materials, the wood, that is the direct materials for the job, will go into the work in process inventory account. So for example, we requisition 8,000 of materials because we're going to start working on job 6. Of that 8,000, 1,000 of the materials are indirect materials. So since we requisitioned 8,000, okay, raw materials inventory is going to go down by 8,000 because we brought those materials to the floor to start working on a product. So we credit raw materials inventory 8,000. We're going to debit work in process inventory. That's the direct materials for the job, 7,000. And then the 1,000 of indirect materials gets debited to manufacturing overhead. So if we can look, I'll use T accounts to show the balances in the accounts. We'll put 7,000 in the work in process inventory account. Manufacturing overhead has 1,000. And then if it's in the work in process inventory account, it also has to go in the job cost record. So on the job cost record for job 6, we'll put the 7,000 direct materials. Okay. Then we've got the direct labor. Okay, so our laborers who are putting together the products, they're going to have to keep a time record. And then the workers' hours for that specific job, that the cost of those hours will be recorded on the job cost record. If it's in the job cost record, it also goes in the work in process inventory account. So as we incur labor, when we come to our payday, we will debit work in process inventory for the amount of the direct labor. We'll debit manufacturing overhead for the amount of the indirect labor. And we'll credit wages payable for the total amount of the wages. So let's say our June 5th payroll time card showed $2,500 for job number 6, so that would have been the direct laborers. And then there was also $1,000 for indirect labor. So our total payroll is $3,500 for June 5th. So the way we're going to record this is we're going to debit work in process inventory for the $2,500 direct labor. We'll debit manufacturing overhead for $1,000, that's the indirect labor, and then we credit wages payable for the $3,500 total amount of wages. So if we look at our accounts, work in process inventory now has the $2,500 for direct labor, and then there's another $1,000 in manufacturing overhead because that's the indirect labor. So then in our job cost record, we also have to enter the $2,500 direct labor, right? If it's in work in process inventory account, it also has to be on the job cost record. Then we can have other manufacturing overhead that's being incurred during the period. And we're going to use that manufacturing overhead account to accumulate all of the costs of manufacturing overhead. And so we debit manufacturing overhead for any of our indirect manufacturing costs. Okay, and we're going to see manufacturing overhead is used as kind of a clearing account. Okay, because then we'll eventually take the amount out of manufacturing overhead and we'll apply it to a job. So when we take it out of manufacturing overhead by allocating it to a job, we will credit manufacturing overhead. And ideally, we'll credit manufacturing overhead for the amount that we had recorded as debits in manufacturing overhead. So manufacturing overhead, we put it in there as we incur it, and then we'll eventually take it out of manufacturing overhead and put it on jobs. So let's say, for example, we have depreciation on our factory equipment. Right, back in financial accounting, we learned to record depreciation. We debit depreciation expense, credit accumulated depreciation. Except, since this is manufacturing overhead, we're going to debit manufacturing overhead instead of depreciation expense. So then that $280 debit is going to get posted to our manufacturing overhead account. Next, we have electricity expenses for the factory have been incurred. So instead of doing utilities expense, we are going to debit manufacturing overhead. Okay. We'll credit accounts payable. And so then that $3,420 is going to get posted to the manufacturing overhead account. We need to record our insurance expense for the factory, right? Instead of debiting insurance expense and crediting prepaid insurance, our debit is going to be manufacturing overhead. And so we'll post that to the manufacturing overhead account. And then our property taxes. So we're not going to debit property tax expense. We're going to debit manufacturing overhead and credit property tax payable. And then that $4,800 is going to be posted to the manufacturing overhead T account. So we'll see, as we're incurring expenses, we debit manufacturing overhead for the actual expenses. And in my next video, I'll explain how we allocate the overhead to the jobs. And when we allocate the overhead to the jobs, we will credit manufacturing overhead.